But talking about IDBI, of course, we at ET Now broke the story first regarding LIC picking up a stake in the bank. What we are now essentially picking up is that the government is actually extremely firm to sell close to 40% stake in IDBI Bank to LIC. Supriya Srinath is joining us with more details. And Supriya, it's a deal that is being criticized with questions asked over why throw good money after bad loans. Why should LIC be funding this bailout? What is the thinking within the government, and what is the rationale really that is leading this deal to happen?
Yes, it has fueled a big political controversy, and which is why the government is out in full force defending the move. We've been speaking to absolutely top sources in the Ministry of Finance and the Prime Minister's office, and they all believe that this should not be seen as a bailout. This should not be seen as an investment by LIC as it has done in the past. This is an acquisition by LIC. And what are the reasons? They're giving 3 or 4 big reasons. One, LIC always wanted a bank of its own. LIC had approached the government of India with its intention to either set up a bank or to acquire a public sector bank, because LIC, unlike other private insurers, does not have a bank of its own. I mean, you look at the others, and SBI and ICICI and HDFC Bank, they all have not one but 2 insurance arms. I mean, one for life and one for general, and they all have bank associations. It comes in handy. LIC handles the, about 29 crore customers all across the country. They give premia to LIC. They get lump sum payments out. A bank can be extremely beneficial there. So there can be no dispute about the fact that LIC needs a bank, and the government believes this is the bank that LIC could turn around and LIC could look at acquiring. So this is an acquisition and not an investment. Also, from a long-term point of view, LIC has a housing finance company, LIC Housing Finance, with a market capitalization of nearly 25,000 crore rupees. Now, imagine a behemoth, imagine a giant with a retail banking proposition, with an insurance proposition, and this housing finance all coming together. This will create a huge retail portfolio, a company with a huge retail portfolio, and the government of India believes there is adequate synergies that LIC will have with IDBI Bank. So that's the difference that's coming in from the government's point of view. The one little thing that the government says is that the real estate assets of IDBI Bank far outweigh in value as far as the core banking operations are concerned. The strategic sale wouldn't have been possible because that would have not amounted to good value realization. On its part, LIC will wait and weigh what it wants to do with real estate. The government will get its proportionate share, because truth be told, an assistant manager in IDBI Bank has no business living in a 4-bedroom house in Cuff Parade. That's exactly what's happening right now. Why should IDBI have these 2-3 towers all across BKC and Worli and Cuff Parade? I mean, they need to get rid of those assets, and the government believes that LIC could be doing this. And I think the big differentiator and the big difference that the government is trying to say, that this is not a bailout as in the past. This is not an investment that we are forcing LIC to make. This is an acquisition that LIC will make. The bank will be for it to keep. It will perhaps be called the LIC IDBI Bank going forward. LIC will also expand operations. They will open new retail branches, and which is where the synergies come in.
Right. Thanks, Supriya, for putting all of that in perspective. It's a story that broke here on Friday at 9:30 a.m. and the government reacting to all the recent criticism, saying this is not an investment, it's an acquisition. Why should India's largest insurer not have a bank?